Okay, just a moment. Okay. Yes. So good afternoon, everybody, once more for since I have just pressed the record button, let me once more welcome all of you all to the Pragati series, webinar series of Sahamati for the month of July 2025. Uh, this series today is called the title today is Unlocking Data Beyond Banking, and it is coming at a very good stage. We've just about finalized our lending report, our fourth lending report for the account aggregator ecosystem. And what is extremely appalling to us as the team that works on this report is how growth has been, or the growth trajectory has been almost exponential every time. So every time from the previous report that we do, and we do this report every 6 months, we see the growth trajectory to be almost exponential. And when we go through the details of the report, you will know how it has actually evolved over the last four reports that we have published. What has come out, the other two things that have come out is, one is, of course, how lenders are very keenly and very aggressively trying to implement that framework across the entire life cycle, across the entire lending life cycle, not just now limiting to issuance and credit dispersal, but actually seeing it, utility of this data sharing framework across right from issuance to actually fraud detections and early warning signals, and better customized product suites, etc. The second thing that has come out really well is how lenders are, some of them, and have recognized the usage of the cross sectoral nature of this framework. And we think that that is going to be one of the top three reasons of exponential, or rather even deeper, more immersive usage of account aggregator over the months to come. The discussion we have today is on how the cross-sectoral data types can be used to provide better product suites and to serve all segments of customers by the lending industry. So, without taking any further time, let me just quickly tell you all what the format of this webinar is going to be. We will, commit the next 20 to 30 minutes towards nuances of the lending report that we have published. We'll dedicate time towards that. I would request all of you all to put yourselves on mute, please. Right. After that, we would have a fireside chat with our esteemed guest, Mr. Deepit Singh, founder of Abhi Loans. Just a moment. I think I
Charu,
have to...
can you mute yourself? Somehow I'm not able to mute him. Yeah.
Yeah. And then we have presentations by technology service providers who have worked extensively in providing solutions for the lenders. So, without much ado, let me now welcome Rutvik Paikine. He is my colleague in the communication and policy department. He's a policy analyst with Sahamati, and he has worked extensively on this report. Rutvik, please put on your video. I will put off my video, and please take us through nuances of the report that you have worked on for this for FY25. Thank you.
Thank you, Ruchi. I'm unable to start my video. I don't know why, but I'll start presenting parallelly. And maybe if you can check the settings, if you can.
I'll check.
Is my screen visible?
Yes.
Yes.
Okay. I still can't turn on my video. I'll rather just go ahead with the presentation. Oh, okay, I can do it now. Hi, hello folks. Thank you all for joining. I'm Rutvik. I'm under the policy wing at Sahamati. I work on research and policy communication, and I've been working with the team on this report, and I'll be glad to walk you through what we have discovered. And as rightly pointed out by Ruchi, I think there has been a phenomenal growth within the ecosystem, not just lending. And this has trickled down to how lending has evolved and how AA ecosystem is enabling lending outcomes for not just institutions but also customers in the financial sector. So without further ado, I'd like to just start with what we have. This is a general update of what the ecosystem is currently at. We are currently seeing a very strong month on month rise in the consents fulfilled. We are seeing currently more than it's nearly touching 2 crore consents each month, and this is also trickling down to how lending is now evolving in the ecosystem. These are general numbers. I think you'll all be aware of these. I would like to directly go to why lending is more systemically important in the ecosystem right now. We see that around almost 65% of the consents fulfilled belong to the lending sector. This cuts across various license types. Although majority share is for NBFCs, which account for around 60% of the consents in the last financial year. But private banks, housing finance companies, public banks, these institutions are also now gearing up towards catching up to that momentum. So although we see that there is a huge disparity, I would also like to add that there is a certain element of the number of FIUs also that play a role in the current uptake, because right now we see although the value proposition of the ecosystem is fairly established, that hasn't completely followed up on the usage front. But that I think, and we all think, is now changing. What we see in this financial year is that a lot of early signs of diversification across license types and across product segments were witnessed. So that's why we feel that this has been a very this it's not a monumental change right now, but the current stage of the ecosystem we are in, it's we have a strong potential to become a step change in how lending will evolve from here on. Uh, from the ecosystem's point of view, we see a significant penetration of a ecosystem being a very systemic part of the financial sector. We have from the supply side, we have around 61% of uh, data available on the A ecosystem, and that has also translated into a lot of usage. We currently see around 9% of all the accounts enabled have already been linked to some of the account aggregators. That has also translated into a lot of usage from the customer front. So we estimated that around 12 and a half or slightly above that users might have used account aggregators for some of the financial services, if not just lending. So it's translated into around 11%, which is like one in every nine adults in India must have used or must have interacted with account aggregator in some of their journeys in a financial journey. So which is a huge number if you look at it. And there is a significant runway for us to uh, for us to scale up our usage from here on. And from a lending perspective, what we have estimated is that, and although we'll dive into these numbers later on again, we see a 3% penetration in the number of lending that has happened through the account aggregator ecosystem. So this is a number that we've got from one of the reports that have been published in the industry, that 53 lakh crore rupees of loans were disbursed in the last financial year. And out of which we estimate that around 1.67 lakh crores were facilitated by the account aggregator ecosystem. So although in a absolute terms it's huge, in percentage terms it's minuscule but still growing, which I feel that points towards the potential of what the ecosystem can enable. And although right now it's mostly unsecured, cash flow based assessments, enriching of bureau data, stuff like that, those are the use cases that are picking up right now. But through the course of this presentation also, we want to establish that AA is not just for unsecured lending, but also for secure journeys, and where cross-sectoral data can also be enriched. So maybe just a short overview of what the methodology of the report was. We got self-reported data from around 12 institutions in the
সুমনদা
ecosystem.
ভাবে ভালো
Uh, so these account for around 67% of the lending consents in the ecosystem. So we had although it looks like a 12 is a very small sample size, and we would like to work with all of you to increase that. But if you look at the consents fulfilled number, it's a significantly huge number. So around two-third of the ecosystem was already participating in the two-third of the consents were already, we got the data from those institutions. So we have extrapolated that self-reported data to estimate what would have been uh, the lending volumes and values across the ecosystem. And there are a few assumptions that we are assuming that the patterns of lending are equivalent across the sector. So these are the assumptions that we can run with, and we have found that around 61,000 crores were disbursed in the second half of the last financial year, which is around 20-21% more than what was observed in the first half of the financial year. So we have gone from 46,000 crore loans in the first half of FY25 to 61,000 crore loans in second half of FY25. So, and to give more perspective, we currently saw a lot of slowdown in the unsecured lending space. So despite those headwinds, lending has been brisk and steady in the ecosystem. So those also imply number of loans being also increased in the same measure, but we see slight more increase in the number of loans. So that is also reflected in the overall lending number. So these are the cumulative and the FY25 data, which is just the addition of earlier data. I'll just skip through this. But the important and more interesting trends that we currently see in the ecosystem is that the volume and value of lending is constantly and very briskly growing. Rather than briskly, I would say it's growing in a hockey stick manner. So from FY24 to FY25, we see a very huge jump in volume as well as value of loans, and uh, we would like to the ecosystem would definitely would be that curve could be extended beyond the coming financial years as well. But the interesting bit is that the average ticket sizes have gone down, which is more, I would say, impactful. That uh, we started off with a very small ticket size. It also could be because of the early days of the ecosystem. Not much lending was happening then, but since FY23, there has been a consistent uh, lowering of ticket sizes, which points that uh, the lending is going to right corners. It's going to last mile of the country, which is which should have been our which is rather. Um a goal of the ecosystem at large, where is not just limited to customers who are already accessing loans, but to also underserved and unserved customers in the ecosystem. Uh, One more interesting point is that although we see that a lot of lenders are using, though the penetration is around 3% in the overall sector, but this hides the fact that a lot of lenders at an individual or an entity level are using account aggregators for a significant volumes. So a lot of NBFCs, smaller early challenger institutions, they see around 50 to 80% of their customers being served through account aggregators, and they are saving humongous amount of operational costs, processing costs, all of those uh, transactions, and all of those things that bring down their efficiency. Those are now being made more efficient, more productive using account aggregators. So this is one thing which we feel is uh, which needs to be perpetuated across the ecosystem, but the intensity of usage needs to be picked up across all the institutions across license types. Although we are seeing that uptake, like a lot of the banks and private sector banks as well as public sector banks have shown the intent to scale up the usage. Uh, I feel those will reflect in the coming lending reports as well. So some interesting stats which we found was that when we talked already about the headwinds, the growth despite headwinds. But the another interesting aspect is that although we see that banks are a very sliver of a percentage in terms of consents fulfilled in the ecosystem, which were around 2% of the 2% in private banks and around 0.73 in public sector banks. The value of the loan disbursed is almost one fifth. So it also corroborates the fact that the average ticket size is 20 times of what NBFCs have lent out to. So this we found is a very interesting phenomenon. It also aligns with the general practice that the private sector and public sector banks have a higher ticket size. They'll give out higher value loans, but that is also starting to reflect in the ecosystem. So going forward, we definitely not preempt, but we presume that a lot of lending will also be contributed by banks. And we've also seen some early signs of diversification. Before this report, in the previous financial years, uh, consumption loans, which are personal loans and consumer durable, were around 97% of all the loans that were giving out through the account aggregator ecosystem. But this time we saw that in the last half of the financial year, uh, eh, other types of loans like home loans and LAP, motor loans, unsecured business loans have grown steadily, have grown much more faster than consumption loans. So, which we believe is a very nascent signs of diversification. But would to make a better claim, it will be better if we can wait for the coming reports as well. But we feel that these are early signs of diversification. So, other than the usage, what we feel as uh, the other than the gross value and volumes of loans, there is also quality of loans, the aspect of that. The AI ecosystem is also enabling those transitions. So beyond underwriting, the how can the lenders and the institutions can assess what is the quality of the loan, what's the repayment status, will that portfolio or some part of the portfolio, what's the risk of that turning into NPAs? All of those can be assessed by the lenders in real time across use cases which go beyond the typical underwriting phase. So we feel that a ecosystem, and this has been established at the industry level now, that a ecosystem can definitely enable lenders to use cases across the credit life cycle. And in the report, we have delved down into different use cases and what are the early outcomes that we're witnessing. But these are the use cases that we currently see will make a dent in how risk management is approached in the ecosystem. And I'll just pause a few seconds if you want to take a screenshot. But I think, anyways, you might have access to these use cases. Uh, just one small challenge that we currently see before wrapping up this presentation is that currently the usage is very concentrated in certain pockets of the ecosystem. Top 10, top 20 FIUs account for a significantly large percentage of the consents, especially in lending, which we feel needs to change. We would like to work with all of you lenders and see how we can intensify the usage of account aggregators at your respective organizations, uh, because that's how the ecosystem should pan out. There's a significant value proposition that all of you can leverage, and we're just waiting for the right moment to scale that up. So these are the few. This is the one challenge that we see needs to be acknowledged, and uh, we should work upon it. And for that, we also feel that certain enablers that we're looking at, which will alleviate those concerns of concentration, is that a lot of journeys that are currently the ecosystem has implemented is mostly straight through processing DIY journeys where customer himself or herself is going through a loan journey on his or her phone. But a lot of those journeys can also be replicated in a assisted manner, where on ground agents or DSAs or staff of the institution itself can also assist those customers and handhold those customers to go through the data sharing journey, which also saves a lot of time for the customer and is also better outcomes for the institutions, because that human element sometimes is very necessary. And certainly where the ticket sizes are higher, the human element is certainly very, very important. The second point would be that the one we talked about how can AA use cases be perpetuated across the lending life cycle. So it's not just about onboarding or underwriting, but also about how risk management in real time can be assessed by the institutions. And the third one would be the usage of cross-sectoral data. Where currently we are only relying on bank statements and banking data, but how can data types like say mutual funds or insurance or even deposits for that matter, how can those be leveraged for a richer assessment of the customer? So just to drive down the first point, I have a short testimonial of a on-ground executive. After that, I'll just close this presentation. So let me know if this audio is audible for everyone.
आपका नाम क्या भैया?
अनिल कुमार सर,
आप कहाँ से?
यूपी से, यूपी डिस्ट्रिक्ट जालौन।
कि आपका पहले अकाउंट एग्रीगेटर आने से पहले और आने के बाद लोगों का कस्टमर का कन्वर्जन रेट में आपको क्या फायदा दिखा, कुछ दिखा या नहीं दिखा?
पहले सर क्या होता था कि कभी किसी का कस्टमर आईडी या कुछ जो होते हैं डालने के लिए तो नहीं मिल पाती, तो कस्टमर को ज्यादातर बैंक भेजना पड़ता था हमें। अब एग्रीगेटर 1 मिनट में उसको 5 मिनट लगते लोन बनाने में। पहले उसका स्टेटमेंट निकला नहीं निकला तो दिक्कत आती रहती, तो लोन इस तरीके जितना मैं दे रहा हूँ करके टारगेट नहीं हो पाता था हमारा। बैंक भेजा कर कभी बोल दिया सर्वर डाउन है, कभी बोल दिया कि अभी लंच हो गया, कभी थोड़ा बिजी हुआ, ऑफिस मीटिंग चल रही, तो कस्टमर परेशान हो गए, बोलते भाई अपना जब हमारा निकलेगा तभी लोन लूंगा, उसके बाद में लोन नहीं लूंगा।
तो आपको ज्यादा वक्त मिलता, ज्यादा
लोगों को मैं रिसीव अटेंड कर लेता हूँ।
और आपको क्या फायदा कुछ लगा और एग्रीगेटर से कि जल्दी हो जाता है?
सर यही है कि हमारा टारगेट अच्छा होता है, इंसेंटिव अच्छा मिल जाता है और टारगेट जो कंपनी उससे अचीव कर लेता हूँ और कस्टमर को ज्यादा लोन प्रोवाइड कर देता हूँ।
So the testimonial itself is very self-explanatory. So the runway is huge, the impact is huge. We're just waiting for the institutions to leverage and scale up their usage. And I would just like to close the presentation here. You can get the report by scanning this QR code. And we look forward to your feedback. If you have any questions on the report, we'll be happy to listen to you. I'll just pause here for a couple of seconds for you to scan this QR code, then I'll stop sharing.
Thank you, Rutvik. We can dedicate about next 2-3 minutes if there is any question right now. If not, then we'll take it at the end of the session.
Sure.
रुचि दीपित को आपको
Yes,
करना
yes.
पड़ेगा।
Okay, I think Rutvik, we will just wait for the questions to come to us on email. Will you be kind enough to please type in the email ID where anybody, if they wish to, the info email ID where if they wish to reach out, they can.
I'll do that.
Yeah. And
Okay.
you can stop sharing your screen. Thanks a lot, Rutvik.
Thank you. Thanks, Ruchi.
Hello. Hi, Deepit. Welcome to the Pragati session of Sahamati. It's a webinar series we do every month, a webinar awareness series that we do every month. A very, very warm welcome to you. For the benefit, you're on mute, Deepit.
Thanks for having me. I'm glad we got the mute out of the way in the beginning.
Yes. I'll just quickly introduce you to the audience. For those of you who do not know Deepit already, let me tell you that he comes with my recent knowledge is that he is been in a way an entrepreneur, a serial entrepreneur of sorts, managing going from infrastructure and textile industry to now being the managing director of Abhi Loans. Deepit has covered a lot of spectrums, not just the credit dispersal spectrum. And with Abhi Loans, what they are trying to do is revolutionize secured lending, especially for the underserved segment.
Thank you.
I'm really sorry for the commotion in the background. Really sorry about that. Uh, So, yes, I will not take too much time. People are waiting to hear from you, Deepit, and Abhishek, over to you.
Yeah. So thanks, Ruchi, and thanks, Deepit, for joining in. And uh, I think today's session on especially focusing on secure lending and LAS and loan against mutual fund is one of the very famous topic these days among CXOs. And we thought who better than calling Deepit, who has been into forefront and early movers in the space. And we'd like during the fireside chat, which we are having, we will try to focus on understanding the whole market around this and also how AA has become an enabler to such secured lending. And over the past year, we have seen the tightening of these regulatory tightening norms in terms of unsecured lending. And this has led NBFCs to pivot from purely unsecured to more secure. And I'm seeing a lot of traction building up. Initially, it started with companies focusing on small ticket size business loan or MLAP to now low risk products such as loan against mutual fund and loan against securities. Uh, and now players in this digital lending space are looking towards leveraging the data infrastructure and AI capabilities for new avenues and product offerings. Uh, so, and LAS and LAMF is seeing traction from new age fintechs and new age NBFCs who has been focusing on unsecured loan previously. And I would say this is not just a product innovation, it is more digital and data innovation. And I would like Deepit to maybe start with a small introduction about himself and also as Abhi Loans is one of the companies who is majorly focusing on this space, what made him think over getting into this space and building product around it? So over to you, Deepit. We'd like to know more about you and how and why you started building in this space.
Thanks, Abhishek. Um, Abhishek, I think this is we saw a trend which we feel will continue for a bit, and the trend simply is that um, the Indians, as the new generation of Indians, are increasingly investing their savings into financial assets, and these this trend can be seen and is visible through whether you look at the mutual fund Sahi Hai campaign, whether you look at the SIP numbers, whether you look at the DMAT numbers, any particular trend line that you will look at, and like your friend Rutvik was mentioning earlier, we are seeing an hockey stick growth pointing towards Indians putting their savings into financial assets. And what we've seen many times earlier also is that wherever savings typically go, uh, a lending product or a liquidity product typically is required for that particular asset class. And so we saw this with when people wanted to invest in real estate, housing loans took off. When people started investing in gold loans took off. And we feel that something similar is going to happen here. Um, I think what has also happened is Indians are becoming increasingly more sophisticated investors. They realize that for them to get an alpha on an inflation beating return, they need to remain invested for a certain period of time, especially when it comes to equity markets. And However, life circumstances sometimes get in the way, right? You necessarily don't have the luxury of remaining investing for a 5-7 year period and letting compounding do its magic. So we're trying to come in and help people in trying to bridge over temporary liquidity gaps and letting them remain invested in the market and let them create wealth uh, which will serve them for a long time. So that's the vision that we have. We want to continue doing this across products. It's started with mutual funds, has moved to
ला दे खाना ला दे
we've moved to shares, but we have a bunch of other products that we want to continue innovating in using the same philosophy.
Okay. And do you think, Deepit, is it the right approach for a new age NBFC who were doing initially personal loans, CD loans, now looking at this space? Do you see? I think what I read was there are around 10 crores Demat accounts now, or individuals who have Demat accounts, and right, it's still, although I've seen many players jumping into the LAS and LMS space, but still the retail market looked at around 20-30,000 crores. And there is a whole 4 trillion, I believe, the capital market opportunity. So, how do you see and what do you suggest to such digital NBFCs, or uh, what is your outlook since you have been working into space?
My sense is, Abhishek, especially for NBFCs that have grown up in the digital era, let me just put it that way, that are not used to a branch-led lending model. This is a natural alignment into the secured lending space. The reason is because this particular asset class, not only in terms of origination, not only in terms of credit writing, but even the post-dispersal processes lends itself to a lot of digital advantages. When it comes to operations, when it comes to security enforcement, a lot of it can be automated digitally. So my sense is it's going to be a product that a lot of the digital first NBFCs should be looking at. The other thing is, I still feel that we are at day zero of this particular market in terms of awareness, in terms of the customers leveraging this particular product. So there's a lot of headspace for lenders to kind of, especially the new age lenders, to innovate and try and grab market share for.
To Deepit, to the same question, the LAS and LAMS product existed before as well. But for last 1 or 2 years, when we have seen a lot of traction building up, what has been the two, three bigger enablers which you think has actually given a lift to this use case?
So I think couple of things, Abhishek. One is that the process was fairly manual till a couple of years ago. As it goes with anything manual, there's a certain level of opex that comes with that, and thus it only makes sense to do it at a certain size. So what we saw, the last product was existing, but it was existing in the ultra HNI segment. You saw a lot of promoter funding happening, but it was limited to large ticket sizes. The other area where it existed was typically when the brokers or broker-led NBFCs um, were lending to their own captive clients. These were the two areas where LAS was really flourishing for a bit, more than 2 years ago.
And he sent me this, and it was like, is error false? And I'm like, okay,
Janin,
that's
can you mute yourself? Sorry, Deepit, yeah,
Today,
continue.
yeah. So today, obviously, it's a very different segment. I mean, I'll just give you an example. Our average ticket size is less than 2.5 lakh rupees. Our median ticket size is close to 70,000 rupees. So this is a true retailization of a product that was um, earlier meant for the ultra HNIs. And that retailization or democratization of the product has only been made possible because of the rails that have been built in part by A and also some other rails such as MF Central, etc.
So, going more deeper, since I have been reaching out and we have been discussing a lot about how account aggregator can actually enable and unlock such products. So, you have been using account aggregator. We'd like to know more about what was that you took this decision of integrating account aggregator, and how at what all level it has been integrated, and what have been the initial use cases and which you are seeing using account aggregator.
So I think for us, it's the biggest use case, especially in the LAS and LAMF space, has been the consolidated account view that we can provide to a customer and give him a pre-approved loan offer from for based on his portfolio. This was not possible earlier because data existed in silos. There was CAMS, there was Carvi, there was NSDL, CDSL, and there was no data sharing. With we've been able to build a flow that allows us to fetch the complete portfolio of the customer and allow him to get a consolidated loan offer based on his portfolio. It, and this typically happens in couple of minutes or less. So this is significantly reduced the processing time. My team tells me that our processing time has reduced by about 70% in some of the cases that we've been doing. So it's obviously uh, really helping the reduce the friction that the customer has to go through to get a loan against his own assets.
Okay. So Deepak, just more insight upon, like you said, that it helped in reducing 70% of the TAT, but you are seeing any incremental benefit on user drop-off with among the journey, or maybe on a customer satisfaction score? Is there something which you can share with us?
So
And
absolutely, Abhishek. I mean, it's let me put it this way, Abhishek. More than improving in metrics, we are at such a nascent stage and day zero, like I mentioned, that I think we're doing. AI has allowed us to do something even more significant, which is open up customer segments that were not existing before, right? Um, you were not being able to serve customers sitting in, let's say, a Guwahati or a Vishakhapatnam or wherever. If they were broking with some local broker there and had a demat account with none one of the not the big banks, with not, let's say, not an ICICI or an HDFC, it was impossible for that guy to leverage his assets to get liquidity. That is what AA has enabled. This customer segment or this particular retailization of loan against shares, especially, wasn't going to be possible without an AA framework or an AA infrastructure being there. So my sense is, I think you're shortchanging yourself by saying that metrics have improved. I think we've opened a completely new customer segment.
okay. So Deepak, just there in the industry, when I meet and interact with uh, the lenders, many a times I hear that the data which is coming from A is not sufficient to enable less. So what is your view and what is has been your experience? And the second point will you can answer in the same go is, apart from underwriting, do you see use cases beyond underwriting and when it comes to serving customer and monitoring customer or portfolio? And on one more point to it, generally in last cases, how does the underwriting work? So does it involve banking as well? Or just 3 points if you can just shed light on.
Okay, yeah. So I will, yeah. So I think the strongest enabler has been in the underwriting and the pre-dispersal process. And so I'm going to concentrate a lot of my comments there. And I can understand, Abhishek, when a lot of people say that uh, what A is doing today is not enough for enabling less. And I tend to agree with them, but I tend to disagree that A is not doing enough. I think there are challenges um, with A, but then there are other challenges also with the depositories, which are CDSL and NSDL, which I think it's important to make that distinction, right? So just to answer your question, the biggest challenge that we are currently facing with I think somebody also has just put it on the chat, is that there are frequent uh, customer consent rejections from FIPs that we are seeing, and unfortunately, we're not getting very transparent data on why this is happening and how this can be reduced. So I think my sense is that's an initial stage problem that we will all solve. And to be honest with you, in our experience, this trend is getting much better. The biggest challenge that we are facing today, Abhishek, is that we're getting high level data from NSDL, CDSL, for the holdings of the customers, but we're not getting granular data. So I'll give you a very small example. So if you hold 100 units of Reliance, I get to know that. But if you've already taken a loan against 50 units of Reliance, I don't get to know that. So while I know what is your portfolio, I don't know what is available to kind of lend against. So this is just one example of data granularity that I think A needs to get into by working with these FIPs to help us in developing better workflows. Also, I think one easy place to look at, Abhishek, in terms of improvement is the journeys that happen with, let's say, somebody like an MF Central versus an AA. And while we understand that MF Central is an uh, is an enabler itself, and here there is a third party that is interacting between us and the FIP. I just feel that the difference in the journeys is so large that the numbers that we see in terms of consent given to fetched. So for example, a user who gives us a consent to fetch his portfolio, we see a
पूनम एक काम करो ना, सुदेश को कॉल करके पूछो कि भाई तुम इस मेल पे रिप्लाई
Ravi,
करो.
yeah.
go ahead. Deepit, yeah.
Yeah. So, for example, the consent given to portfolio fetched conversion for MFC is currently around 99%, while with A it's about 53%. The conversion, and this is I think the pipe that really needs to kind of get better. This 53% is also an improving trend, and don't get me wrong, but I think that is something that we need to improve. And like I said, the granularity of some of the data is really going to help in the workflow. Um, what I would like to say, Abhishek, is that the A has been a great first step in enabling LAS. But I think what we need to keep in mind very clearly is that it's a first step, right? And we need to do much more to kind of make sure that it creates the difference that you want it to create if we want to build secured lending based on AI. The other thing, so that is where I see a lot of the work that needs to happen over the next year. I don't think we should be worried about post dispersal processes, managing customers, managing repayments, mark to market ratios. All of that can be solved without AI also. But I think if this is the portion that I think if we sharpen the pipes, we'll be able to make a big difference. So that is one. I think the other big thing, Abhishek, that I think the A framework needs to maybe look at, and especially if it wants to play a bigger part in secured lending. Unsecured lending is a different ballgame altogether. Is that the in especially in secured lending, the data that we get from A is only the first step because it enables the underwriting, right? However, the second step, which is the actual lien marking of the underlying asset, is a completely broken process right now, with both the depositories, both with NSDL and CDSL. And I know you guys have a limited role to play in that, but I think we need you to kind of be the spokesperson to help us get those pipes ready, because I think that's where the explosion will happen, right? If somebody comes on to my platform today and I tell him that he can get a 5 lakh rupee loan based on his a portfolio, but then I have to make him jump through hoops to get that 5 lakh rupees, it's a very disappointing journey. So while A has helped us solve the initial part very well, I think we need your help in also enabling the actual transaction, which is where a lot of the problems are happening right now.
Perfect. So, Deepit, as I understand, I think we are all seeing, basis my interaction for last 2 years, I've seen the overall conversion in account aggregator has been increasing significantly. And now, generally, when I interact with lenders, we see a conversion around 60 to 65%. And major of the, like Rutvik has shed light that uh, A for many companies has been one of the, like, around 70 to 80% even I've seen some of the companies reporting us that all the customer they have sourced and disbursed loan. Uh, Amongst them, around 70 of the percent of the customer have shared banking or used account aggregator to share the financial document. I think this is a evolving phase, and there are certain measures which we are taking from a Sahamati perspective, and RBI has also come up with a SRO application for which we have already applied. And these some of the things which I am seeing that it will lead to stabilizing the ecosystem more well, and we see higher conversion rate in coming time for sure. Uh, I think some of the suggestion which I can take, and we have interacted and also suggested some changes in the schema is underway. We are representing it with the regulator, but we are open towards feedback and anything which can we can do, and it can help ecosystem and build it strongly. So coming to our last question, Deepit, one thing, how do you see this space evolving, not just loan against mutual fund and loan against security, but any financial asset? How this space is looking out and maybe 5 years down the line? How do you see it?
So couple of things, Abhishek. I want to I'll answer your question, but I just want to mention. I think you're in such an interesting crossroads that I think the regulators that you need to get involved with are not only are going to be all over the place. Whether it's IRDA, whether it's SEBI, whether it's RBI, because I think you're the ones who are going to be able to give them true feedback on what is the end user journey looking like. Because I think that's where our all our goals are, right? I mean, we need to serve the mid-market retail segment in India. And so I think it's important that you give this feedback to all regulators. So that's one. I think, Abhishek, our our goal and where we see this going is that this is again day zero of this digital secured lending space. Um, we we've already started a so just to give you insight, we are already started a pilot for doing loan against insurance policies, and we've already started work on getting the data from AA for the insurance policies that we're going to be lending against. Obviously, this is nascent, but then so was mutual funds 2 years ago, right? I mean, so the work has already started, and my sense is, why do we need to limit ourselves to shares or mutual funds? My sense is insurance is going to be next. But then there are so many financial assets where Indians have put money in, whether it is postal saving schemes, whether it is the um, some of the tax saving bond. A lot of these places where Indians have put money in and they're locked in and they need liquidity, we should be able to enable them to lien those assets and get temporary liquidity against that. So my sense, to my mind, the landscape is much bigger than what we see today. It's just that we will have to continue building products and ensuring that the ecosystem continues to evolve as quickly as product innovation happens. I think these are going to be the two things that we will have to, you from a Sahamati perspective and us from a lending perspective, we'll have to continue doing together.
Uh, Thanks, Deepit. I think it was quite insightful. And I think now we can open it up for the Q&A. And if there are some questions with Deepit, you can see in the chat box and can answer. I think that is what we can discuss. Or guys, you can raise your hand if you want to have if you want to ask any question directly from Deepit.
So I think the first question is that one of the questions I think somebody, Vicky asked that wouldn't a LAS be available in the bureau report? Yes, the answer is LAS is available in the bureau report. Sometimes it is, sometimes it isn't, but the underlying assets which have been pledged to get that LAS is typically not available in the bureau report. So that we need to get from the AA data. I think there've been a bunch of questions about consent.
Yeah, that is Ruchi answering, I think. So guys, any other question you see? रुचि कोई क्वेश्चन है क्या जो we have to answer?
No, not really. I don't see any specific question. There is only a discussion that's happening around what's the LTV on these assets? So somebody asking how much
I
interest
think
is charged on LAS products.
Just quick answers. LTV typically is an internal credit policy of lender to lender. RBI has mandated equity products or equity-based mutual funds to be limited at 50%, and debt can go higher. So that's where the LTV restrictions are. As far as interest rate, again, it depends on the credit policy of the lender. It can go from 10% to 17, 18%. It depends upon the customer segment and the underlying asset that we're kind of selling.
And what happens if someone defaults? Deepit, one other question which has come.
It's the same thing that happens in case of any default. There's a repossession and liquidation of the underlying asset, Abhishek.
And this can be done digitally, but that's
It can be done complete. So the underlying operation is the same in the sense that we have to liquidate, we have to repossess and liquidate securities. It's just that it doesn't have to be done physically because there's no physical asset.
Then account aggregators help verify income or financial health. And
Unfortunately, I can't answer that one, Abhishek. I don't have any
yeah.
experience.
So generally, what we have seen while interacting with the lender is it's not about the transactions and getting the income generated and viewing the transaction and finding out income. It is more signals which lender get when they talk about the last mile, specifically how many transactions are they seeing in a month, every month, and how long, what was the, like in account aggregator, you get the date of opening of the account. So that is one other signal. And there are alternate data models which are built around specific profiles of customer, like EV, one of the profiles which where one of the strategic project which we are doing is EV drivers. So lenders generally have built logics basis the route on which this EV rickshaw runs, and also with their own experience around building the model, they have seen similar customer what is a banking pattern, and that becomes a surrogate. And especially in rural, what people are combining is a kind of saving habit they want to push with the customer. Eventually, from that saving, you can get the loan amount. This is something which we are seeing. So, not specifically is underwriting properly, which you see in the prime segment, like when you see clear incomes coming in the account. But on ground, there are other models and alternate data which really helps you to underwrite a customer. So I think Deepit, that's all from our side, and thanks for giving us the time and spreading, giving us some playbook around how it
Thank you,
is, how
Abhishek,
you
for
have been
letting us.
doing it, and looking forward for more interaction and helping you come up the curve. Thank
Thank
you.
you, Abhishek, for spearheading this very new rails, and hope that you continue the good work and we ride on your shoulders.
Thank you.
Thank you.
Thanks, Deepit. Thanks, Abhishek. This has been very enlightening, and of course, there are takeaways for people over here. If there are any further questions, please write to us directly, and we will come back to you. Thank you. There are some nice words of wisdom for Abhishek today. Thank you, Abhishek, for all that you do. Okay, so great. We now move on to the second segment of our webinar. Typically, all our webinars, we speak about, we pick up a topic, and for the benefit of the audience, we also tell them. So we deliberate on the topic. We talk about use cases. We talk about what's new, related to account aggregator for the topic that we have chosen for that Pragati. And then we kind of seal the deal by inviting technology providers who will showcase their solutions for the particular topic in conversation. So for today, where we are talking about unlocking data beyond banking for account and using account aggregator framework, we have invited and we have two technology providers who are going to showcase their solutions for that segment, not just using different data types, but what all solutions that they have for the lending community overall. So the first company that I wish to invite is Finfactor. Finfactor has been in the account aggregator space for quite some time now, and clearly we can say that they've dipped their fingers deep into this ecosystem. They know a lot about various use cases across all sectors and very much in the lending industry. So I would like to introduce Likit Punjabi, who is the head of business development at Finfactor, to take us through the presentation. Likit, I will put off my video now, and you can share your screen. Thank you.
Sure. Thanks for the intro, Ruchi. Good to be here. I also have my colleague Vivek Sinha with me, who leads our tech stack for the LAS and LAMF product. I am going to just quickly present my screen, and then we'll talk about how we can leverage AI for lending against shares and mutual funds, right? So I think Deepit in the previous conversation covered pretty much everything in terms of how they are leveraging account aggregator and how it facilitates faster conversions and quick pre-approvals of limits. So let me just jump into the presentation straight up, and then we'll talk more about this. So just to give you a quick intro of Finfactor, we are a Westbridge backed company. We work with multiple account aggregators, and we act as a TSP. We have solutions in the space of lending, wealth, and insurance. You can see some of the names that we work with across the industry. We work with the likes of top banks, NBFCs, as well as wealth clients. We have fintechs also working with us.
Likit, sorry, but if you are presenting something, maybe you are showing the wrong screen.
Your screen is not visible.
Okay, let me just. Vivek, can you try presenting the deck? I think there is some issue on my end.
Likit, are you facing not getting the share button enabled?
Like we were able to see the screen, but when you did a now we can see the screen.
Yeah, we can see now. Yeah, go ahead, please. Thank you.
Yeah, so I was just introducing Finfactor, right? We work with the likes of the top, right from the top banks to NBFCs and fintechs, right? We have clients across the lending and the wealth ecosystem. We also have a tech product that is dedicated specifically to powering loan against mutual funds and loans against securities. What we do is what we've noticed that the loan against mutual fund part is pretty much like a done deal now through the MFC journey, but account aggregator is supremely relevant in terms of fetching the overall client data for anything that is in the demat holdings, right? Currently, the process is kind of broken because you have to ask the client to submit their cash statements, which at times tend to be as old as, let's say, 2 or 3 weeks, which tends to create friction in terms of asking the client to upload a statement, and then you might not be able to approve the right kind of credit limit. Through account aggregator, because you can fetch real-time data as latest as like the previous day, right? You are able to get a full view, and it goes beyond stocks. You can now get other assets as well. Like I said, everything that is in the demat holding can be seen through account aggregator. So that way the customer experience is much better. It's like in 4 clicks you can do a very quick view of what is the pre-approved limit for the customer, and that acts as a much better hook, so to say, and for the customer to continue the journey and go on and like complete the loan process, that right. And we see reduced drop off through this. In terms of the market size, we already know that India, is a large market. Like I said, has covered everything in the previous conversation in terms of how large the opportunity is. So yeah, we are very early in this segment, and we see a great scope in this. We are seeing very good response to some of our early adopters as well. Vivek, just inviting you here to talk more about the specific process that some of our partners follow, right, in terms of the risk underwriting and approving the limits.
Sure. So I think thanks, Likit. I know in the previous session most of the points were covered. But just quickly covering, right, in terms of how AI is basically turbocharging LAS, right? One is basically you are able to create a much early hook or a pre-approved limit for the user by getting easily the portfolio data via account aggregator, which was being done by CAS, for example. The second point, which is equally important, is with account aggregator, because you have a recurring data fetch, the retargeting, upsell, cross-sell opportunities become much more easier. You have more information, right, about the user. And the third, again, very important point is, while today it is predominantly shares, right, with all the regulators, SEBI, etc., pushing for dematerialization of all kind of assets, right, whether it is unlisted shares, AIFs, right, bonds, all these will, even insurance policies, right? So the moment these holdings, right, these assets become dematerialized, the overall net of what all you can lend against as securities will also increase, right? So now I'll basically come to Finfactor's lending plus account aggregator stack. And as before this session started, we said one part is of course the use case and understanding everything around the use case. But second, and an equally important part is how can tech service providers enable the NBFCs, banks who want to do this by building a good end-to-end solution, right? So if you look at the market today, when it comes to LAMF or loan against securities, there are players who provide certain areas. For example, there are certain solutions in the origination space. There are certain solutions which are there in the loan management space, but we don't really have a solution which provides an end-to-end, right? And when I say end-to-end, it includes everything from origination, using AI to create a pre-approval, having the full origination stack for from KYC, e-sign, mandate, and then also having the digital pledging integrations, right? Then having an LMS which actually supports LAS as a product, right? So I think what we are providing from the Finfactors table is basically the AI stack. Plus we also have under the brand name of Sufi Labs as the whole lending stack, right? So I'll just take a couple of minutes on this and just tell you, which are the areas and where we can help the NBFCs and banks and fintechs equally who want to be in this business, right? So the first part is the loan application and processing, right? So we have, we have already discussed, we have pre-built, LOS journeys, with UI, with APIs, right, where you can provide quick pre-approval with the portfolio data fetched from account aggregator, and we have all the KYC, BRE, e-sign modules, right? So you can, it's a plug and play kind of solution, right? Then we also have the digital pledging. Of course, this is enabled via the NSDL, right? Where you are, in a matter of minutes, you are able to get confirmation of the pledge, right? Earlier, this cycle used to be much longer, right? And the moment CDSL APIs also come, that could also be another big impetus to this whole line of business, right? Then another very important piece, which is specifically for LAS, is a risk engine and decisioning, right? See, when you typically do like a personal loan or any other kind of loan, right, the type of risks that are involved are very different, right? When it comes to shares, especially listed shares, right, the risks are huge and they are very complex, right? You have market risk, right? The price can go down anytime, right? You have concentration risk. You don't want all your shares that are pledged in your name to be one particular share, right? You want to have a certain level of exposure to different types of shares, right? We have basically built a tailor-made risk engine which can solve all the kind of risk controls that you want to have when you are doing your last business, right? A very important piece, and I think there are very few solutions today in the market which do this really well, for last. And then of course we have the loan management and the whole payments, so the full bread and butter of loan management, basically interest processing, etc., loan side life cycle management. But one important thing here, because this is a very I would say evolving space, from a regulatory perspective, it's very
Keshu, can
important.
you mute yourself? Thank you.
From a regulatory perspective, it is very important to have solutions which are compliant and which are ready to adapt to new compliance which comes, right? So again, this is an area where we have a lot of focus, and I think we already spoke about cross sell and upsell. And cross sell upsell is, of course, the simple way is, you monitor the portfolio, and whenever there's new holdings the user is getting, you can nudge them for a loan. But if you want to do it in an intelligent way, you can basically build algorithms. You can match it with how much the user is actually using, right? Let's say a customer who has utilized 90% of their current limit, right? If they get a new portfolio of holdings, it's much easier to sell to them, right? So we have solutions in all of these areas, end to end. The whole last solution can be enabled through our technology solution. So any questions, if they're there, happy to answer, or I'll move to the next slide. Okay, or we can keep the questions for the end also. So I think this is what we are talking about, right? So full end to end. So origination, you have your STP journeys, agent assisted origination, BRE and risk management, customer management, right? Conversion engine. On the loan management side, you have the loan lifecycle management, digital payments processing, NPA management, accounting and GL modules, right? So limits and collaterals. Again, this is a very important key area, which is the collateral handling, right? So demat holdings as a collateral are very different as compared to, let's say, if you're taking a loan against property, right? The collateral is immovable. It has its own complexities. But when it comes to demat collateral, there are different processes around that. You have to the customer has to place the collateral in your name. Then you have to, if the customer is requesting, you have to unplace the collateral. If the customer is not paying, for example, or the customer has become delinquent, or the loan is in shortfall, you may also have to invoke the collateral, right? So you can overtake the collateral from the customer and sell, and then get the proceeds from there. So our system basically is built to handle all kind of collaterals when you are doing loan against securities, especially around demat holdings, right?
I think this is a critical point that
Yeah.
Vivek has mentioned, right? So all of us generally look at the AA data from just the underwriting perspective, right? I think there is a lot of insight available in the data to also upsell, also cross sell. You notice that folks have other EMIs ongoing from the bank account, which looks like a personal loan EMI. You could look at selling a LAS, right? Very relevant, targeted offering for the client. So dynamically increasing the limit. So all of that our system powers. We've created nudges, which Vivek mentioned, right, which are customizable. You notice that the user is already using, let's say, 90% limit. You can send a nudge that, okay, we have a pre-approved offer for you. This can be customized to 60, 70, 80%, depending on each lender's own criteria, right? So a lot of intelligent retargeting is possible through account aggregator, which otherwise would not be possible, right? You cannot expect somebody to create increasing, like upload their cash statement every now and then look for a top up. So ongoing basis, basically the data can be leveraged.
Right. And I think, just adding to that, Likit, I think one of the, especially if I talk from a, technology service provider, TSP perspective, one of the bigger challenges I see in the market today is that there's no, true end-to-end integrated solution, right? Which is there in the market, right? Most of, as I was saying in earlier also, most of the solutions you have are piecemeal, right? So you have solutions around origination, or you have solutions around, let's say, collateral management, or you have an LMS, then you plug in a collateral management, right? We don't really have a tailor-made end-to-end solution for LAS, and that is where I think our solution, I think kind of fills that gap, and that is we have been, I think we have had that theory, right, that this will basically become big, and that is why we have also focused in this area, because we truly believe this whole A plus lending thing can become huge, right? As with LAMF growth, LAS growth can also, especially in the retail segment, can turbocharge in the coming time.
So retailers hold like 10% of the Indian stock market roughly
Yeah.
now. And that's the direct holding that I'm talking about, not through mutual funds, right? Direct retail holding is roughly, it ranges from 9 to 10% depending on where the market is. Right now you're talking about a $4 or $5 trillion market, and 10% of that is just the retail holding. Imagine how much credit can be unlocked through this opportunity, right? This is
Yeah.
beyond mutual funds. Yeah. So very large opportunity in terms of the market size.
And there are challenges, of course. For example, as I mentioned, one is, let's say, the CDSL pledging API is not being there, right? Of course, that is something which all of us, obviously, in our own ways can nudge, at different ways. But when that happens, obviously it's going to give a huge impetus. Second point, I think, in the earlier session, I think Deepit was basically calling out that today when you fetch the holdings, it does not differentiate like which one is pledged, which one is not pledged. Again, I understand it can be a challenge, and hoping that we solve that in the coming days. But especially in the retail section, a lot of the users who would be taking loans, right, are typically first time less borrowers. So it is a problem, however, may not be a huge problem, but I think we should definitely try and solve that, because that could be an issue for a lot of borrowers also, right, who are taking a loan again. They may get a false sense of how much they are eligible for, and then later they may get disappointed, and may drop off.
Abhishek, we've, I think, broadly covered the presentation. We can open it up for Q&A maybe if there are any questions.
So anyone who has any queries can raise your
Likit,
hand.
Vivek, can you all also please write your email IDs in the chat box, just in case anybody wants to reach out? So right now we are answering questions that are related to today's sessions. If anyone has any other questions, discussions to be done, please feel free to reach out to us. We'll be happy to
I
get
think
into a discussion.
I think there were some questions in the chat. I think Shiva had one question. Uh, could we take that?
Yes, yes, please do.
Sure. Yeah, I think okay. I think Abhilash has posted that. Oh, Abhilash has asked that question. Yes, I think that is a challenge today. I think even when you look at digital pledging, right, it is only enabled even for MFC, right? It is only enabled for single account holders, right? For joint account holders or for non-individuals, it is a manual process today. And again, there's a like number of loans, etc., may be low for non-individuals and joint account holders, but the loan amounts can be very pretty high, right? So that could also be a big enabler, I think, when that happens, right? I think this ULIP FI question, Likit, if you can take. I think somebody has already answered. I think in the LI schema, somebody has already answered. So I think Shiva has asked this
Ruchi
question,
has,
right?
I think, already answered.
Yeah.
Yeah.
Yeah, Ruchi has also.
I think Shiva has asked this question. Can you share the major challenges faced by our technology teams? So biotechnology teams, I think it's a very good question, right? And we have been part of implementing this with different lenders also in the process of implementing, uh, and we've also seen them them struggling with of course the other solutions which they were using, right? One of the major challenges is, again, I feel, is because there's no integrated end-to-end solution, right? Lenders typically take piecemeal solutions from multiple vendors, right, from 4 or 5 vendors, and then vendor management and actually implementation becomes a huge challenge, right? So if you have single vendor handling the whole solution for you, it becomes much easy, right? And second thing is, many again, most of the solutions, right, don't provide solutions for use cases in retail, in HNI, in business loans, right? While that's again a problem, right? So let's say a vendor is providing a solution, but they only provide for retail, right? So then if you have an HNI business where the use cases may be a little different, then you have to go to another vendor, right? So that's one challenge. And I think that can be, a lot of it can be solved by having pre-integrated solutions, so that your integrations points are low and the implementation becomes easy. I think the next question, Likit, if you could take data fetch from FIPs.
So some of these are like systemic teething issues, right? Like it's an evolving ecosystem. Till a while back, you did not have the NPS data coming in, and now it comes in, right? So as the system evolves, like has been previously discussed, we'll have more and more FIPs coming on board, and the data quality improves as we see. So I think Deepit mentioned that in the previous session, he mentioned that they see data success rates of about 50 odd percent. For our clients, we've seen it's gone up to upwards of 70% now, right? So I think that's an evolving ecosystem. And with each quarter, you will see improvement in the data quality and more FIPs sharing the data. So we're very positive about this.
Yeah, I think there were also questions around downtime for CDSL, NSDL. I think, of course, we may not be the right, kind of people to answer that, but I think there's something which we can obviously highlight to our, POCs at NSDL and CDSL, and we'll definitely do that, right?
And I'll just ask Ruchi if you can also pitch in for this. Well, guys, I think for all systematic issues, you can write to us, and if you are from the REs, you have access to support portal where you can raise all these questions, and we are taking these common issues at industry level with the respective regulators. And as Vivek and even Deepit told, so the ecosystem is evolving, and we are seeing we are addressing all the issues which we are seeing in the industry right now.
And this are more of a performance issue, right? Right now, the initial when the FIPs came, right, CDSL and SL, they thought X volume, right, and X kind of data. Once the complexity increases, when the number of pools increases, right? Right now, what A typically does, what in a day, right? Couple of crore transactions, right? So that's a lot of volume, right? So even right now, if you look at all the big banks, also they go through this phase where they do the improvement, right? Hence, if you look at emails from Sahamati, right? They are taking downtime and doing the improvements. Right? Not all improvements can happen, okay, but as on they comes, they are doing it of themselves.
Okay. Y'all have put your email IDs, right? Likit, Vivek, y'all have put your contact details.
I put
Yes,
mine. I
yes.
think you will also
Okay.
put.
Okay, perfect. Thank you so much for this presentation, and definitely it was enlightening. As we can see, there are so many questions coming in, which means that it's understood well. So, folks, please reach out to Team FinFactor if you have any further questions or need to connect with them for their solutions. Thank you, Likit. Thank you, Vivek.
Thank you.
Thanks, Ruchi. Thanks, Abhishek.
Okay, just a moment. So I would now like to invite the second organization that will be making the presentation today. Arpan Adarsh from FinBox. Yes. FinBox is also another technology company very well known for the work that they do in the lending industry. And they have also created some solutions for, credit dispersal using different FI types and data coming from account aggregator. Arpan is going to represent FinBox and make the presentation today. Arpan is the product solutioning head with FinBox. Thank you so much, Arpan, for joining us today. The stage is all yours. I'll put off my video.
Thank you so much, Ruchi, and thanks, Abhishek, for reaching out and give us this opportunity to present our solutions. Hi everyone, my name is Arpan. I take care of product solutions at FinBox, and I'm deeply involved with all the account aggregator ecosystem related stuff that's been going on around product development and sales. Just give me a second while I share my screen. Abhishek, is my screen visible?
Haji.
Perfect. So to essentially start with, I'll just give a brief about what FinBox does. So we are into two line of businesses. One is on the distribution side, which is the credit infrastructure piece of our product. And the second is all the risk management suite that we have built. So essentially on the risk management or data or risk platforms, we have products like a bank statement analyzer, which is connected with multiple account aggregators. We have alternate data underwriting suite, which is device-based underwriting for customers. And we have a multi-bureau connector. On the credit infrastructure side, we have digital journeys, we have an LOS, we are building a marketplace lending stack. We have a Sentinel, we have a business rule engine, which is called Sentinel. So essentially what we're trying to build here is like an operating system for, all lending operations. If anyone wants to start lending, they find all the components here, they integrate with FinBox, and they're able to scale their business and go live. So that's pretty much the introduction to FinBox. Today's session, I'm going to be talking about home loans. Essentially, the topic was around LAMF, around secured lending. And there were three major products that we were discussing: LAMF, LAS, and home loans LAP. So I think FinFactor team took care of the first two. I'll be taking care of the last two, which is the home loans and LAP piece. So while I'll keep it short, there are different kind of home loans, but to start with, we'll take these three, which is the pre-approved properties, non-approved properties, balance transfers, and top-ups. Typically, what we see is in a home loan sort of a scenario, there are two underwritings that happen: the underwriting that happens for the property and the underwriting that happens for the customer. Now, in case of property, the digitization is not yet through. The ULI piece is still trying to build it. It's still work in progress. The process, a lot of process is still physical. With FinBox, we have certain solutions around a virtual contact point verification. We are integrated with certain lenders like Teal India, etc., for land verification. So all of that work is done, but not majorly with the account aggregator and ULI stuff going on. While on the other side, which is the underwriting customer piece, for both the applicant, co-applicant, guarantor, we use account aggregator primarily to fetch the banking statements of the customer. Now, typically in terms of assets that are currently, there on account aggregator, we are able to fetch banking data. We are able to fetch mutual funds data, stocks data, insurance data. There is something around pension as well. But banking is the most stable across all of it, and hence lenders right now the distribution across banking asset is the most. So account aggregator is used to fetch customer data, while other data points are also fetched in the journey, which are not through account aggregator, but through other channels, which is ITR, GST. There is an employment verification that happens, criminal check that happens. There is alternate data, which is the device data, which with FinBox is called Bank Connect, and obviously bureau data is there. So this is like the underwriting piece for the home loan. Now, I'll be presenting a solution that we have sort of developed and sort of deployed in one of our customers, which is Aditya Birla Home Finance, Housing Finance, ABHFL. Now, ABHFL essentially has 3 loan categories. It has a Pragati home loan, which ranges from 5 lakh to 1 crore up to 90% market value they lend. Pragati plans is up to 1.5 crore, 75 to 80% market value they lend. And they have balance transfers and top-ups, which is up to 30% based on repayment record. All of this data is public, so you can also head to and sort of grab this data. In terms of the steps, how home loans are taken, the customers have to share personal details. So to set the context, home loan yet secured, any sort of secured lending is not yet fully digital. It takes a lot of operational challenge. There are a lot of different points at which the process is handover from one team to another team, and it keeps happening, right? Because there's a lot of manual verification, and especially in case of housing finance, this is even more because the property has to be validated. There should be guarantor and all of that. So in terms of simplification of the steps, the customer share their personal details. They get a call from Aditya Birla Capital team. They disclose the required details. They shared all the details that are required, essentially the financials that are required to underwrite the customer. And finally get the quote from Aditya Birla Housing. Right. Now, where we have plugged a solution in this whole piece is we essentially power their underwriting piece. So, the data that is fetched for underwriting is fetched via FinBox's suite, where account aggregator is part of it. Apart from account aggregator, there are other parts where the customer can upload their manual documents as well, and we'll be able to process it. But we'll keep it focused to the account aggregator piece and how essentially the adoption or conversion account, for Aditya Birla Housing has changed over time since they have, moved to account aggregator. So in simple steps, the A integration in the customer journey looks like the account aggregator A is introduced at the document submission stage at the first step. So essentially how we do it is we first ask the customer to go via an account aggregator flow. We have a multi-account aggregator system. So we figure out if, any of our account aggregator partners are giving, success rates above a certain threshold. It eliminates the, physical documentation piece. It's a consent-driven mechanism. And, essentially what we have seen that it speeds up the verification. The processing time for ABHFL on this particular step has reduced by around 60%. So initially it used to take around 3 days for them to, collect all the documents. Now everything happens in less than a day. Things that have, operational value that was delivered by account aggregator was around, there was faster turnaround time. Customer can simply, put in their phone number and OTP, and we'll be able to fetch their bank accounts. Initially, it used to be that the customer has to submit their bank statements for, let's suppose, 1 year. And these bank statements could be across multiple bank accounts of the customer, the co-applicant, as well as the guarantor. So there are a lot of bank statements that needs to be collected first from the customer and then has to be processed, right? And this used to be a very hefty process because the customer goes, downloads their bank statements manually from the net banking portal. A lot of their times they don't remember the net banking password. They reach out to the bank, upload scanned statements. The whole opportunity for fraud increases. So a lot of issues used to be there, operational issues used to be there before account aggregator, which is not seen upfront. But you can definitely, talk about it by seeing that the overall processing time reduced by 60%. Now, in the account aggregator setup, FinBox is registered as a TSP. There are essentially 3 types of TSPs: a data standard TSP, data analytics TSP, and user experience TSP. We are integrated with OneMoney, NADL, Safe, FinView, Proti, and Anumati. So essentially, it's a multi-account aggregator system, and it's a real-time switch that happens, and I'll show you how it happens as well. Some numbers. So before, with a single account aggregator, when we were just integrated with one account aggregator, we used to see that the data fetch success percentage used to be around 50%, right? With multi-AA smart routing, now this data fetch success percentage is from the time the customer enters the first OTP to the time customer's data is pulled, right? So it's an end-to-end conversion. With the multi-AA smart routing that we have built, this number has risen up to 70 to 75%. So in real time, we check which account aggregator partner is giving the best success rate and choose that account aggregator partner to process that particular case. Whereas just the consent to data fetch rate, like the customer put the OTP, the account's discovered, the second OTP for connecting the account, and then finally the consent page comes. Now the consent to data fetch rate was initially around 73% with a single account aggregator. With multi-account aggregator, this number is close to around 94%, which is huge. Now, as per an analysis, on an average, 80% of data which is fetched from the FIP is correct. That means there is no inconsistency in the data. There is no incompleteness in the data. If you're fetching the 6 months transaction data for the customer, you will receive all transactions from the bank. While in 13% of the cases, the total data which was fetched from account aggregator was either incomplete or inconsistent. Either some transactions were missing or some transactions were wrongly fetched. Like the transaction narration would be there, but the balance would not be there. So cases like this. And 7% of the total data remained unusable. Essentially, we couldn't use that. There is no logic to essentially correct the data or even make sense of the data. So this is what we see right now with a multi-account aggregator system that we have built. As part of the journey, looking at for the home loan, there are multiple people who need to upload their bank documents, and essentially for a particular person also, depending on the amount of ticket size that he's applying for, they might also have to submit multiple documents. Now, in most of these cases, these are assisted journeys that happen, right? So the DSAs either reach out to the applicant in person, or it's a virtual process that happens. So I'm going to show you a journey which essentially we have with FinBox. This journey, helps the DSAs or the customers to select multiple banks at once and upload banking documents via either account aggregator or uploading banking documents in PDF format or in scan format through this UI. Is it visible to everyone?
Yes, Sarpan.
Okay. I will just zoom it a little. Okay. So in this case, we choose 3 banks: ICICI, Axis, and AU Small Finance Bank. All of these chosen together, the DSA or the customer sees 2 options: either fetch via account aggregator or via PDF, upload via PDF statement. This is the first screen where the account phone number is entered. Now, as we were mentioning in the start of the session, we have reached a scale wherein on a monthly level, we are seeing, and I remember Abhishek quoting this number, Abhishek or Ruchi, we onboard across we have across 2 crore consents in a month right now, right? That means a lot of these customers might have given consent on account aggregator network previously. Now, the beauty of this is that if you already have given the consent previously on a particular account aggregator network, you don't have to give the second OTP, right? So in this case, what happens is that what's happening is Axis Bank is already connected with this account aggregator network for this customer. So he doesn't have to, connect this account again. While for AU Small Finance and ICICI Bank, the customer has to connect the banking. So we'll have to give the OTP when he clicks on link selected account. The first OTP comes from AU Small Finance Bank. The second OTP comes for bank. The consent page is essentially shown to the customer. These are the consent details. I think Sahamati has done a good work in establishing the fair use guideline and everything around it, how the consent page should look like. Even the account aggregators have helped us customize the screen so that it's compliant. So all these details are as per how Sahamati and account aggregators have sort of told us. And then the customer just simply gives the consent and all of these details are connected. If in case the account aggregator network doesn't work, because we know that the current success rates of account aggregator is close to around 70 to 80% on a top. If we are doing a PL journey with a specific segment, the success rates can also, in our case, we also see in certain cases, in prime PL cases, the success rates goes as high as 82%, right? So out of 100 customers who are coming in, 82% of the customers are able to complete the process via account aggregator. But in case of home loan, etc., we look at a very different demography. We look at customers from tier 4, tier 5 cities as well. And not all those banks are selected. So, we have to upload bank statements as well. So all of this is sort of for the same banks. We can also, I'm just showing you how does the PDF journey looks as well. They just upload all the bank statements at once, click on process. All of these bank statements are automatically processed by the system. Yeah, and depending on for what duration you wanted the bank statement, the customer is stopped in the journey, asked to upload the bank statements for the required duration. And as soon as the customer uploads all the bank statement, which is required for the duration, the PDF journey completes as well. So this is how the overall journey looks like. Now, from an assisted point of view, what we also facilitate is we can have all of this, we can have this journey integrated in your digital journey if you have one. But again, as I said, in secured lending, most of the pieces are not digital. It's mostly operated in a phygital way, wherein we have also sort of enabled to send this as a link. So the DSAs can essentially generate this whole screen as a link and send this link to the customer via WhatsApp or a message. Typically, the customer will open this link. The DSA would be on a phone call, and the DSA would guide the customer. Though it's very simple, the DSA will guide the customer to how to go about it. Right? If the DSA is present in physical, the DSA can also complete this journey. But this is one flavor of account aggregator journey that we have, which essentially works for the home loan segment, where multiple bank accounts are collected from the customer, and the demography is tier 4, tier 5 cities. I'll take a pause here and see if there are any questions before I move forward. Okay, perfect. I'll take.
I think there were a few questions here. What was the reason that even after, if you see the last question, I think it is referring your earlier slide.
This slide? Or I'll take the question for the last. I can't see the questions right now, so that'll be better. Perfect. So, as I was saying, and these numbers were based on that with a single account aggregator, we see an overall conversion of 50%, while with a multi-A, we see an overall conversion of around 70 to 75%. How this happens is there is an account aggregator gateway switch that we have built. Now, how this gateway switch essentially works is that calculated on real time. As soon as the customer chooses the account aggregator, we calculate these number depending on the past performance of that bank across different account aggregators. From a volume point of view, we process close to around 8 to 9 lakh cases in a month, across different lender partners that we have. So 8 to 9 lakh account aggregator cases goes via FinBox's account aggregator system in a month. And we have like plenty of data to calculate this metric. So, behind the scenes, how it's happening is that, if somebody is clicking on Axis Bank, this is how they would look. That best aggregator for this bank is safe, 93% success rate. The system would be calculating the success rates on the background for each of these account aggregators as well. And the journey can be facilitated in a way that we can do an auto switch. Like we select the bank, account aggregator partner when the customer chooses account aggregator as an option. Or we can show this as a list to the customer as well, and the customer can also choose the account aggregator partner. Why we are doing this? Because as we also saw that video wherein even the DSA partners in rural areas of India are now knowing about account aggregator. If somebody is informed about the account aggregator ecosystem, they have already connected their accounts with one. We'll just show the list of account aggregator with which account aggregator is working best, and let the customer choose the account aggregator and move forward if they want to. While it's completely configurable and depending on how the lenders want it, both of the flavors work equally well. Now conversion metrics for ABHFL. Now this is pretty interesting. So the overall A conversion rate as of last month is around 60%. Okay. The overall conversion rate right now is around 60%. ABHFL, Aditya Birla Housing, started using account aggregator last year around April. So in April 2024, we had 3 requests coming with single account aggregator, right? So there was a single account aggregator. They started with 3 requests. In July 2024, it went to around 786 requests. Manoj, you have a question? In January 2025, it was around 8,678. In June, it was around 15,199 requests, right? So overall, the adoption of account aggregators, that number of cases that are coming to ABHFL, out of those, how many are being processed by account aggregator? They have reached an adoption rate of close to around 55 to 60% right now, right? And their aim is to, sort of increase it to 75 to 80%. Now, not all of this is technology problem. A lot of this is also an operational issue. The education on the field, asking the DSA partners to choose account aggregator as a valid channel, building trust across the customer segment that they're serving right now. So we have worked with ABHFL not just on enabling the technology to fetch via account aggregator, but also on the operational aspects of it, on how to build trust, how to distribute knowledge, how to build screens so that it builds comfort. We know that for a very long time Amitabh Bachchan has been advocating that आप अपना password and OTP foreign platform पे share ना करें. So there is a sort of trust issue that's still there, but I'm sure it's been coping up, and we as TSP partners help our lenders to achieve that. So, few numbers. 60% of adoption of account aggregator for ABHFL has happened. As of recent, from single A to multi A, now they are using around 4 account aggregator partners. Their current success rate lies between 60 to 65%. With a multi A setup, they want to reach to 70-75%. The average turnaround time is now 10 days for a home loan. Previously, it used to be around 13 to 15 days. A lot of this reduction in time has happened on the overall collection of data, not just on account aggregator, but other services that we are also providing, like ITR and GST for self-employed customers, etc. But yes, account aggregator has played a major part in that. And out of the overall bank statements that are collected, around 55% of the cases are marked as salaried as per the bank statement. That's a huge number. So I saw few people asking questions about how salaries are calculated from bank statements fetched via account aggregator. So account aggregator is a system which will help you get the banking transaction of the customer. It will help you get the account summary of the customer. When was the account opened? What was the PAN number used in the account? What's the customer name, address, date of birth of the customer, mother's name, father's name, and a lot of other variables. It's then a job on top of it to analyze those transactions and create variables like income, obligation that you can use in underwriting, right? So if you need help with that, you can reach out to us. For ABHFL, home loan is accessible to everyone, and the most impacted teams, for account aggregator, which after enabling account aggregator were the credit team, credit ops team, and RCO team, because these are the people who used to get these incomplete bank statements, fraudulent bank statements. You would not believe that to make sure that one bank statement is correct, right? And if that bank statement is sent to the bank, it takes around 100 and 150 rupees to verify from the bank if this bank statement is correct or not, right? If it goes into a manual RCO process, obviously there are like FinBox would do an RCO check on top of it, but certain cases still has to be verified from bank when there is a high ticket size. RCO team has a pile of cases on top of fraudulent bank statements being supported, with all of these syndicate fraud being taking up and shaping up in the industry. So account aggregator with trustworthy pulling of data from the bank has definitely reduced a lot of work from these teams. And are the land record digitized with ULI? No, they're not using in terms of digitized land record right now. All of this process is still physical. One thing that definitely worked from them is that they were working with 4 or 5 vendors earlier for different kind of data that needs to be collected and processed. Now they're working with just one vendor. It's easy to sort of communicate, escalate, etc. Operational wise, also there are fewer point of contacts. Now, very interestingly, ABHFL has seen success with banking data on account aggregator. Their management wants to now move towards using mutual funds data for underwriting as well. Abhi Loans CEO was also saying, the mutual fund, essentially a lot of our Indian nationals are moving towards investing, and mutual funds is the primary tool that they're using to invest their, in earnings. Mutual fund has a lot of, looking at the mutual fund data, you get to actually understand what is the disposable income for the customer, right? There is a lot of investment that's happening in India. So ABHFL, I think, is one of the few lenders in home loan department, which is trying to use mutual funds data, but it's difficult to use mutual fund data from, from account aggregator. And he very, rightly pointed that the journey is complicated right now, when we compare it to MF Central. In MF Central, we get like a portfolio which we need to connect. In mutual fund, we get each mutual fund that we have invested in, and I have to select each mutual fund one by one to essentially connect it to my to give consent, right? And then there are challenges with data completeness and all. Now, all of this is on the underwriting piece. Where else account aggregator is helping is on the post-disbursal piece. So now, until the pre-disbursal piece, the loan is disbursed, the underwriting piece come into picture, etc., with account aggregator and other documents that are processed. Post-disbursal piece, account aggregator helps us to take consent from the customer until the loan tenure. So until the loan tenure, the bank statement for the customer can be fetched on a regular interval, at least 5 times a month, maximum 5 times a month, with transactions, until the loan tenure. So this is a huge data for building an, early warning system. If, some customers are, seeing stress in their income or increase in the obligation piece. So all of that can be easily flagged earlier before the default for the customer. So I'll just show you what all do we have here. So on the EWS piece, loan monitoring piece, there are essentially multiple data points on which this can be enabled. Bank data pull via account aggregator is one. There is bureau data scrub that happens. Then there is device data which can be there. There is a custom, you can also connect custom APIs like your internal data records for repayments and, bouncing security DPDs, etc. Based on the bank data fetched via the income verification, monitor income deposits and inconsistency with the declared income, the velocity check happens, transaction monitoring happens, stability check happens, on the income deposits, income fluctuations. So all of these triggers can be raised as soon as, the data is fetched. There is also a post loan monitoring use case, which is collections, wherein before the eNASH, you can just fetch the balance of the customer and see if the customer's account has balance or not. So essentially, you are paying some money to the eNASH vendors for doing eNASH. essentially with the defaulted customers, you might be doing 5 or 6 eNASH in a month, resulting in paying to eNASH vendors as well. So you might probably just do an account aggregator pull before doing an eNASH and see if the customer's account has balance or not. And if customer account has partial balance, you can also modify the eNASH amount as per that. Right. So all of these solutions are also being built across the account aggregators ecosystem, and especially the AWS and collection piece is something that is taking shape after the whole lending underwriting piece has already taken shape. That's it. There are some challenges and asks. So there are, I think, across the ecosystem there is an ask on data completeness. From FinBox, I think we, across PFM use case or any other use case, wherever mutual fund data is used, I think a simplified mutual fund AA journey is required. I think for a very long time, everyone has been asking for enabling GST data on account aggregator, but I'm sure there must be a lot of challenges that the Sahamati team is already working on to enable this, and other financial data around ITR, etc. And that's it. Reach out to us if you have any other queries, but that's all from my side, and I'm open to questions. Over to you, Abhishek.
Yeah, anybody has any questions from Arpan? So Arpan, just I may go ahead. And so one of the point you mentioned is like 55% conversion, like of the so will it be right to say if 100 customers are examined by the by ABSL, 55 odd comes through account aggregator. Is that right?
Yes.
And because in secured lending you have applicant, co-applicant, guarantors. तो अगर
Yes.
हम उसको split में देखें तो what is it 55% on application basis or it is on the
No,
total number
application.
of accounts?
Total number of
Total
accounts.
number of banks pull.
Total number
Okay.
of banks. Total number of banks pull.
Okay. And they don't have a digital UI, maybe mobile app for onboarding customer, right? It is majorly SMS, which is.
Yeah, most of the secured lending across home loans would not have a complete digital end-to-end journey, but onboarding would probably happen on the app. Servicing will happen on the app, right? They will have the app to collect device data of the customer, but not end-to-end journey.
And one of the good use case which I've seen with one of the housing finance was they have integrated even the credit managers with a like they have a
Absolutely.
mobile app for the credit managers. Generally, what happens in housing finance, it's always a PD which is
Yeah.
done, right? It may be for maybe specifically for businessmen. And as you rightly said, completeness of data was a big challenge, even because I come from the housing finance background. So I remember it is so difficult to actually get banking from the customer, and it was always easier for the credit manager to get bank statement. And
Yeah.
credit manager always had a ask of updated bank statement because obviously the decision time frame can span to over a month. अगर कुछ भी उसमें document incomplete रहता है. So what AA is help really is to give complete data. That is one of the very big thing which we undermine sometimes. Secondly, with this use case I'm telling, the credit manager is armed to send the data. So whenever you are doing a PD, at that time the credit manager, if he observes that either the banking submitted by the salesperson or the customer has some incompleteness or he's seeing some signals that he's not able to observe all the credit lines which were there reported in the bureau. So वो match करके he knows that there is another account which exists. So on the
Yeah.
real time, he can, while interacting with the customer, he can just send another link to get either updated bank statement or getting an additional bank statement, which is very powerful use case. And they've also integrated it in their operations generally. So generally disbursement, when it happens, it is the operation guy who generally checks or revisit maybe the bureau also. They check again if the customer has taken loan or not. Or secondly, to also identify own contribution, and because for home loans there is a requirement from NHB that around 10-25% of the money should come from the customer's pocket. So this is all involved bank statements again. So that is also integrated uh, at their level, and I think they have done a seamless job and really helpful.
Just to add to this, Abhishek, what essentially adds to the overall value is from device data, because device data is created on top of the funnel. We get to know what all financial tools customer is using. So how many credit cards of the customer has, how many bank accounts of the customer has. So on the account aggregator network, we don't have to do a self-discovery journey. We can pre-select the banks for the customer. That essentially helps us to get a better discovery, because I think the self-discovery is something which is not foolproof, right? Some banks might get discovered, some might not. But this identification of the bank accounts from the, helps us essentially get an overall view of, okay, which primary bank accounts the customer is using and kahan pe hame lena hai banking.
And one point also, like in fraud, as you rightly said, it took around 150, 200 odd rupees to actually ensure that the bank statement which is submitted has fraud entries or not. It is also not a full proof. Even if you are spending that much amount, it is just that few high level. I've generally seen how
Excellent.
FCU works. They just select the transaction which they
Top
want
5
to check it,
transactions.
and that transaction goes to some ex banker, etc. They have good setting in the bank, and they just check that if the same transaction they are able to see in the real banking. So even if you are paying, the lenders were not confident enough that the banking is correct or not. With
Yeah.
A, at least this space has there is a huge impact. And one of the interaction which I had with the HFC, they were saying that even if they have grown to 20-25% this year, and but their FCU team has been at the same level. Generally, they used to also increase the number of account which were managing the FCU piece, but because of account aggregator and they had around 70% penetration, so they are still working at the same capacity, saving a lot of costs there as well.
True.
So I thought to just add on few of the points which can be usable for others who are building security. So great. Yeah. Ruchi, over to
Much
you.
for giving us the screen. Thank you.
Thank you, Arpan. Thank you very much for your time. I can see that you put down your coordinates over here. All right. So with that, we come to the end of this presentation, this webinar today. If there are any questions, please reach out to us. The video of this entire session, along with the presentations, will be available on our YouTube channel and on as a blog post on our website. Thank you once again, and Sahamati is always there for any queries that you might have at any point in time. Thank you very much.